Hi, this is Imran from iTradeAIMS.com. I'd like to quickly show you what indicators that we use, and the indicators, once you download your template, your chart should look like so. Not the vertical lines. I have put the vertical lines for to indicate areas where what we call the sleeping alligator, the setup 1. These are the areas where we would like to be going short, around this area and this area. But quickly, let me right click, indicators. We have AIMS level, AIMS indicator, and AIMS entry alert, and AIMS AO. Okay, AIMS levels is the gray shaded area. The gray shaded area is based on a fractal indicator, Bill Williams fractal. A fractal is based on basically it's a formation of candles in which whenever you have 5 candles and the middle one has the highest high, or the middle one has the lowest low, you have these fractals printed. So for example, in this example here, this is the middle candle, and you have 1, 2 to the right, 2 to the left. If you see the highs of these two and the highs of these two are lower than this high, so the gray shaded area starts there. And a lower fractal is this. You have 1, 2, 3, 2 to the right, 2 to the left. If you see the low of this candle compared to these two and these two, this is the lowest, so it creates that gray level. This is the structure of the market based on fractal. We call this AIMS levels. We always want to trade on the break of AIMS. We would never trade here or inside here or here. We would trade the break of AIMS. And let me also say that we want to trade the first. We want to trade the breakout of the first fractal out of the sleeping alligators. So in this example, the first breakout out of a sleeping alligator is this fractal, this area, or any of these, right? So this is the first breakout. This breakout was not a breakout because it created another AIMS level and it didn't really continue. So if it had then broken around here and continued, that would be the first fractal out of the alligator's mouth. Here in this occasion, if you see alligators asleep here, and this is the first breakout out of, this would be the second breakout, right? So this is the first, this is the second. This is the first here, and if it broke above this would be the second. Around here, the alligator is asleep. This is the first breakout out of the sleeping alligator's mouth. If you were to go here, this would be the second breakout, but look how far it is. It's far away, so you won't take this. So this is what we call setup 1. When alligator is nice asleep, AIMS levels are tight, and on the first break of alligator's mouth, of the first break of fractal out of the sleeping alligator's mouth, we would go short. We could have gone short here as well, but that would have closed here. Something like this, and this would be the result. Okay, the next indicator is the AIMS indicator. Now, if you don't know what alligator is, the alligator is basically Bill Williams indicator made of these 3 lines: green, red, and blue. According to the structure of the market, blue is the balance line of the market. Blue coincides with AO as well. This red line is basically the blue line of a certain time frame lower, and the green is a certain even lower time frame. Now, based on this principle, we have added another line to this, which we call the purple line. This dotted line is the purple line, and this is the 5 times higher time frame red line. So in other words, if you see price action all the way below purple, this line, it means on the 5 times higher time frame the trend is low, the trend is down, so you just want to take only the down trends. So for example, like here, if you were looking to go long, this long would not have been correct because it was going to purple line. And even around here, if you were to take this breakout around here, you would be going against purple, although purple was relatively close. So the closer it is, the less effective. I mean, because for example, if you were to go long here and then it didn't if it did not bounce against this purple, or if it continued, then this wouldn't be too bad, because that would mean you took an early twist into the uptrend. Around here, for alligator is not asleep, but if, for example, if one was to go long here, which I wouldn't go, you had some distance towards purple. So some people might be interested in trading retraces, and this would be the thing for them, to trade from here all the way up to the purple. Some people do that. I do not, and I do not recommend. See here, the alligator is asleep. You'd go short here all the way, and all the way here you will exit. So that's the alligator. All the trends starts, we count the let's say the life of a wave from where it sleeps. So from where it sleeps, you keep looking at the chart, and since we know that this is the first fractal out of the sleeping alligator's mouth, the later you are, the less chance of success. So this is the first break, this is the second break, this is the third break, this is the fourth break. So if you're entering at the fourth break, you should know that you're actually 33 pip late into this wave. So the possibility, so I wouldn't recommend taking trade here if you haven't taken these and these, right? For example, if this was your first break, or let's say this example, if this was your first break, and then you wanted to take the second break of the fractal around here, you should know that price has already moved around 85 pips in this wave. So this was probably too late, although this is just the second fractal out, but this is too late. Around here, the alligator is not asleep, so if you go here, you're still going into a continuation, so you have to take into account that this entry here actually started from this wave up there, so that's 90 pip late. Right, so alligator helps us. The other big thing about alligator is that a lot of people confuse our trading. They think that we trade Elliott wave. We don't. We have a mechanism whereby the alligator puts us into an impulse wave. So when the alligator is asleep, you're in a corrective wave, which you can call 2 or 4 or ABCs, whatever. Right, we don't care. So this would be your corrective wave, and as soon as the alligator is open, right, and you're going around with this, the alligator open means you're an impulse wave of some kind. Now we don't care whether it's 3 or 5 or whatever. I mean, I know how to count it, but if you don't care, it doesn't matter, you can still trade it. So look for sleeping alligators, and when you get into this, the setup will get you into a possible impulse wave, and as long as the alligator is open, you're an impulse wave. And when it starts closing down, like keep looking at these things, and this green crosses the red, and the AO is turning around with it, you know that the impulse wave is finishing. Right, the next is AIMS AO. AO is this thing here. This AO is based on the crossover of the 5 simple moving average and 34 simple moving average. When price is around here, that first bar of AO red, that means that this is where the 5 is crossing the 34 SMA. And when it comes around here, that means the 5 has come back. So these are the levels, these are the areas where we call the balance line. This is the balance line. Price is usually around the blue balance line as well, around here and around here, as you can see. And these are the areas where we want to start looking into trades. These are then the peaks, which means that we are far away from the normalization for the balance line. And if you can see that if you enter here, then you are far away from the balance line. If you look at it, that's about 42 pips. If you entered here, then you were only 20 pips away. If you enter around here, you were only 12 pips away. So you gotta count this distance, and this will tell you how far or how late you are into a trend. So you want to be as close as possible to these lines, and as close. And if you manage to be as close as possible to these lines, or if you try to be as close as possible to the 0 line on these bars, then your trades are always going to be in the best positions. So the later you are, for example, in these areas, and these areas, the lower chance. And this is then called divergence, because you have a low here, and price made another low, and with this low coincided this low of AO, but when price came down one more time, even lower, it did not go lower. In fact, it made a higher low. This actually then tells you that this wave has lost momentum. As you can see, it's a huge power force here, retraces, and the AO goes dark as well, telling you I'm retracing, and then it turns red here. Then it shows that I am resuming the trend. I have more momentum, but that momentum comparatively to this momentum is now dying, so that means wave is now going back up. And as you can see, divergence here already told you to get out of this trade because the momentum has died and our price is ready to go sideways, and that's exactly what it did. It went sideways and AO was like this, and you wouldn't go long here because you know the trend is down as price is below the purple, and once again it slept. If you went short around here, this would have immediately closed you for 10 or 15 pips or whatever amount. And as you can see, the AO was not really, well, it was close to zero line, but it was too time-wise. There was a strong wave, and this was too early to go short. So I'd like to also mention that when you see a strong wave like this, you got to give it some time. Most of the time, I would recommend that wait for it to come back to the purple line for it to continue again. But in this occasion, as you can see, it slept, went sideways. It really relatively stayed within a range, and then this is the first fractal breakout out of the sleeping alligators. So you would go short here, and if you go short here now, you know that you are about 29 pips late. You could have added here, or taken this setup. But if you take this setup without taking this one, then you're risking too much. But if you had taken this setup and added on here, then that would be fine. But adding on is a different concept. So these are the indicators. Then come the dots. The dots is basically to alert you that price is at or around alligators. So dot comes around with the green line. So when it crosses the green line or crosses the green line up or below, these dots come. Whenever you hit a dot, you know that you are either already inside the alligator's mouth, or the alligator is asleep, or the price has just finished an impulse wave and now coming back to the alligator's mouth. That's what the dot does. And there are other videos in which I have talked about how to use the dots. But more important than dots is understanding the concept of the wave. Is that wave does something like this, an impulse wave, then it comes back to the alligator's mouth, then the alligator sleeps, and when it sleeps, that's when we are interested. Now, when the alligator sleeps, that's where you will get the whiplash as well, but that doesn't matter because your whiplash is going to be very small comparatively to when price breaks out. So for example, if you took a loss there, that was 15 pips, but when you made a winner was probably 25 pip or 14 pip in this, so it was equal, it covered that bit, let's say, and then you took another one here, and then if you closed it with a blue dot or closed on green line, then you had 30 pips, or if you trail this around this, then you again had like 40 pips or something like that. Other days you can get even 150 pips from this. And then there's further techniques such as adding on, which can really increase your return of investment. But most importantly, what we need to learn is to be able to go short here and then close on green line or the red line, or if you've chosen the dot or the break of aims, then whatever is your strategy, you're gonna follow it, and that's what it is. So I just wanted to quickly talk about how I see my charts and how what these indicators are. Thank you for watching.